So I mentioned that we would drop below that 100 level. Why did I pick the 99.92 level? Okay, well, if you look at the price action right over here, okay, we had this run up at the beginning of that candle right there. Just draw that out in time. I gave you about 99.95, 99.92 level. Okay, that small little range of about 3 pips. That's what I was eyeballing last night. Now, I was talking to you, obviously, before midnight. Now, there's things that I teach and have in my repertoire that helps me fine-tune the low of the day, and I'm not going to teach that here. And then, because I have a community, obviously, I'm obligated to. I'm not obligated here. Okay, so I don't want any of you thinking you can guilt me into doing more than I'm already willing to do, but just know that there's things that I can basically use at my repertoire at midnight that will help me fine-tune the actual low within about 2 to 3 pips. Sometimes right on the very low, but it's not needed. Okay, the idea that I just gave on the fly last night when I was doing the commentary was really simply just rooted on the idea of this extension and ending it right on that candle's high and just eyeballing it. So that's what I was looking at. I expected it to drop down. I'm not convinced that we're going to see this top yet. So I felt that it dropped down here. And also, being a setup going into London, that's what I would expect. And I'm going to teach you how to use that information if that's what you want to investigate and study on your own. But notice that we ran up above these relative equal highs, and that's what we ran for the intraday price action target. So the high of the day that was set initially around the midnight time frame, it dropped down, creating the entire run lower, creating the London low real close to where I was outlining it. Not exactly, obviously, but it's good enough for government work. And the market starts to rally and it takes out the initial high of the day. But more specifically, it aims for these really clean levels. You have this high here, here, and here. Remember I was teaching, just like this level here, the market does not like to leave that. That is not efficient. Now, it's efficient for technical analysis, Retail 101, where they'll see that as resistance. It looks perfect. That's what they want because the books teach that. The books are meant to trip you up. It's flawed logic, folks. I mean, I hate to say this type of thing to certain individuals because they take aim at me like I'm trying to belittle everyone else. It's not that I'm trying to belittle anyone else. I'm trying to shake you by the lapels and simply say, look, listen to what I'm saying. Don't believe what I'm saying. Investigate the things I'm stating in the video so that way you can come to your own conclusion. Either I'm making things up or there's really logic behind it. And you can dismiss 99.9% of the things out there that everyone looks and relies on to have in your charts as far as analysis concepts or indicators. You don't need all that stuff. So if I'm suggesting, as I mentioned last night in the video, that we would drop down here and then start to go higher, that sets the stage for what? If this is going to be a point at which it reacts and goes higher, as I was outlining around this time period in the video, that means the opposite should be seen for Euro. But before we get into that, let's fine-tune this a little bit more on the 15-minute time frame. You can see we dropped down, creating the low of the day in London Open. That's our kill zone that I teach here on the YouTube channel. It's 2 o'clock in the morning to 5 o'clock in the morning, New York local time. So if you are using the time window thing over here, set it to local New York time, 2 o'clock to 5 o'clock in the morning. That's the kill zone for London Open. Market comes down, creates the low of the day, runs back up, back into an order block here. I'll let you look at the lower time frames and you'll see that is in fact an order block, an optimal trade entry, and the market starts to create its run up into the relative equal highs, sweeping that as a daily objective. Now, if this is the low of the day, and if it's what I've outlined in advance, and you see that last night beforehand, this is what I expected to see price drop down in and then start to go higher. At the same time, Euro runs all the way back up to the previous week's high. How is this likely to be a false breakout? we have to use intermarket relationships like I'm showing you with dollar index. So if you're trading Forex, it's important to relate your analysis in the trading market. Okay, for instance, if you're looking at euro, that's your trading market. You have to have a barometer, something to measure its movement with, and that's intermarket relationships. So having that with the dollar coming down to a level I outlined last night, that it would be a bullish area, it'd be a sensitive price point to see an advance higher. Because its relationship with euro, it's inverted. So if dollar is going down to that level being 99.92, then it's not a surprise to see euro rally higher as it's doing that. But what is the euro reaching for? This high, and then went so far as to go up above the previous week's high. So they really reached up in there, took out the previous week's high, and at that same instance, right there, that's when dollar hit the objective I told you last night. That would be a buying opportunity for dollar. If it's a buying opportunity for dollar, then it's a shorting opportunity at that very moment. Look at your own charts and study the moment it hits this level here. It's the same moment that the dollar index is hitting that area I was outlining last night for a buying opportunity for dollar. So this is a false breakout because my analysis was done and shared with you openly that would be a buying opportunity for dollar. Setting the stage for what? As I outlined, I'm bearish foreign currency. Could I have bought that? Sure. Because I'm expecting the dollar index to drop down to that 99.92. Did I? No. I went to sleep. I was tired. So I'm not concerned about that. I didn't take the short either. I don't care. I don't want to be in every single move, and I'm not trying to trade Forex right now. But to prove to you folks that are sitting out there asking to see if it can be done in London, does the concepts work? Can I call a move? Can I give an idea? Can I do these things before it happens? Yes. But simply because I can doesn't obligate me to. Okay? I'm not here trying to perform magic tricks for you. Okay? I'm not trying to do that. I'm trying to teach you to trust your own analysis and lean on your own experience, even in the early stages when there isn't that much of it. It's okay. You learn to grow gradually.